Hey, this is Warren Redlick. I wanted to talk about Arcimoto. I had the pleasure of visiting Arcimoto in Eugene, Oregon. I was invited up by the CEO, Mark Frohnmeyer. That's Mark right there. Hopefully, I'm pronouncing it right. They have an interesting electric vehicle company. I'm excited about them. I think they have a lot of good prospects, and I have some concerns. The thing that's special about Arcimoto is that they have a small electric vehicle that's designed for one or two people. It's not quite, if those who follow me know I'm into this concept of the pod car. My pod car design is significantly smaller than the Arcimoto EV. The Arcimoto EV is much wider, about 5 feet wide and about 8 feet long or 9 feet long, I forget, where I'm shooting for 4 feet wide and 6.5 feet long. Mine is designed for only one person. Theirs is designed for two. Theirs has 3 wheels, mine has 4 wheels. But this is a very interesting concept. And although I have an idea of a pod car, they actually have a vehicle that is actually delivered and people are using it. So mine is fictional and theirs is real. This roadster that you're seeing right here is also very cool. The roadster looks like a very good competitor for Harley trikes. You just see a lot of different angles of this vehicle. I'm going to talk about it in more depth, but I just wanted to give you a sense. This is video from their Q3 investor call. They have a rental model they're showing here. Their rental business model is a killer concept that could be very, very successful, generate more revenue in 1 year from renting the vehicle out at certain destinations than you would make from selling the vehicle. The Roadster vehicle they have costs about $24,000 as they're pricing it, which is less expensive than a Harley trike that typically goes for $30,000. Is quiet, drives really well, doesn't have the same range as the Harley trike, of course, because it's going to have maybe 100 miles range where the Harley trike will go farther. But how much does that really matter? I don't think that's a huge deal for most of the time you're driving one of these things. So very impressive overall. What stands out to me most about Arcimoto is the market cap. Down at the bottom center here, you see a market cap of $333 million. $333 million market cap. When you compare this to other electric vehicle companies like Lucid Motors at around $70 billion market cap or Rivian near $100 billion market cap, and you have to ask yourself, wait a minute, I can understand why Lucid or Rivian might be worth more than Arcimoto, but more than 200 times as valuable as a company that's actually producing vehicles, actually has a business model that might work, doesn't really have competition in the same way. I think Arcimoto is undervalued compared to other EV companies that are out there. See, like Fisker and Faraday Future, which have fictional vehicles, are market caps of over $1 billion, while Arcimoto is only valued at $330 million. The potential for Arcimoto is there to have a much higher market cap in the near future, where when you look at Arcimoto and you look at Rivian in particular, their valuation assumes they're actually going to succeed and deliver high volumes of vehicles and actually make a profit at some point in the future. Where with Arcimoto, if they make any profit at all, if they have any success at all, they're massively undervalued. Now, what I see is their goal is to get to the point where they're producing 50,000 vehicles a year. If they sell 50,000 vehicles a year at, let's say, a $15,000 average selling price, which is roughly what they're shooting for, that would be a $750 million revenue number. With a 20% margin, that would be roughly $150 million in profit, and that would make a $330 million market cap look silly small. Then you take into account this rental model, and here's how the model works. They go to a destination like Key West, anywhere the tourists go, and you rent out the vehicles for, let's say, $30 an hour. And they're doing this already. It's already working. Scaling it, making it bigger is a challenge. Everything. The biggest problem with Arcimoto is going to be execution. We'll talk about that. But if you just look at how this works, you take destinations. Maybe it's New York City. Maybe it's a lot of California cities. California in general will allow the Arcimotos to operate more easily than some other destinations. If you figure that each vehicle earns $100 a day in revenue, as in they're rented out for about 3 hours a day, on average over 300 days, you get $30,000 in revenue from a vehicle that costs them maybe $10,000 to build. They would sell it for $15,000. So $30,000 in revenue a year times 10 years, you got a vehicle producing $300,000 in revenue. with almost zero cost. You've got the cost of operating your rental facility as well. There's other costs here, but tremendous value, tremendous production of value if they're able to get if they're able to get that rental model working. It's tremendous value. So if you have 1,000 vehicles producing $30,000 a year in revenue, well, that's $30 million. And what if you have 10,000? Then you have $300 million in revenue. And that's very, very high margin revenue because you've got the vehicle. Once you've got the vehicle, you have some operating cost for your rental facility. It's pretty straightforward. This is a big money maker. So I see a lot of potential. Now I think Arcimoto's biggest challenge is execution. And while I was out there, great conversations with Mark Frohnmeyer, with Jesse from the team. Great seeing everything they've got laid out. They've got this great factory space they just acquired that they're fitting out. They're working with Monroe and Associates, Sandy Monroe, about setting up, I think the paint shop was something they were working on. They're working on how to get their manufacturing processes down and be more effective. But the biggest problems I see are, number one, can they execute, right? Can they deliver what they're talking about? They have big ideas. Can they actually manufacture at scale and deliver product to customers? Can they get the rental model working? And this is an example of one of the things that might be a distraction is they have this new vehicle they're working on it's like a 3-wheeled e-bike. It's basically like an e-bike, but it's got 2 front wheels. It comes from this company, Tilting Motors, that they made a deal with. Arcimoto acquired a company called Tilting Motors. They have this model for an e-bike that's, should be very efficient, should be very good, should be something very appealing, more stable than a typical e-bike, a lot of advantages. But is that a distraction? Like, they have their basic platform that they should be working on, which is their 3-wheeled FUV that has multiple variations, but all the same platform, whether it's Roadster, Deliverator, whatever. The vast majority of the manufacturing is the same. They just spit out a bunch of these things and put a different top on, basically, or no top at all in the case of the Roadster. That seems like their bread and butter. They have a prototype that they're working on that I saw where you're able to enclose it so you're protected from the weather. You have doors and a zip-up window. I don't know how they get past regulatory constraints to do that, but it looks like it works. It looks like a good plan. That was one of the downsides when you're riding it in Oregon on a rainy day. You get wet. When you go out to it after you were inside and it rained, then the seat's wet and you got to dry the seat off. There's little details, but I think these are all things they can work around and make good progress on. Very, very efficient vehicle to own. If you think of it as a market of people, let's take away the rental market for a second and say you're going to buy an Arcimoto. You're someone who lives in a city or an area where your typical commute is, let's say, 5 or 10 miles, whether it's to the grocery store or to work. And rather than owning a car, you own an Arcimoto. The Arcimoto, at some point, they're hoping to get a $12,000. I think their next iteration, once they get manufacturing down, they're hoping to sell their FUV for around $12,000. So instead of paying $25,000 for a car, you pay $12,000 for an Arcimoto. Instead of paying $3 or $4 a gallon for gasoline, you pay 10, 15 cents a kilowatt hour for electricity. It's hyper efficient, so your fuel cost is nearly zero. Insurance costs less because it's treated as a motorcycle, so the insurance is half as much. It's easier to park, it's easier to store, it has a lot of advantages. So I can see that, not that it's going to conquer the entire commuter market, but if you have a world of 300 million Americans and 100 million of them are going to work, and let's say only 1% of Americans who go to work would find this useful and find this to be something that they would do, well, that's a huge market for a company that's hoping to make 50,000 of them a year, right? The concern is the market big enough for a company making these at scale? Well, if their scale production is 50,000 units a year, it's really easy to find customers at 50,000. If you're trying to make 500,000 or 5 million a year, then you need a product that's going to appeal to a much broader market segment. But the market segment that this appeals to doesn't have to be that big because their scale of production doesn't have to be that high. And then if it works, if the model works, then you can easily expand. They're working on this model. I don't know that I love this model, but they're working on this model where they do small scale manufacturing. They're targeting producing 50,000 vehicles in their factory. And if it works, then you build another factory somewhere else, and you build another factory that builds 50,000 a year. So you put one in Europe, you have one on the West Coast, one on the East Coast. Maybe you put one in Australia. And the nice thing about this is, since the niche is small enough, you might be able to reach markets that are too small for, say, Tesla, which really needs to sell 500,000 a year out of any factory it builds. So there's a lot of advantages to this, but for me, it just comes down to this. When I was looking at Arcimoto, initially my reaction, I have the same concern about Arcimoto, Rivian, Lucid. I have other concerns about Lucid, of course, but the same concern about anybody else who's trying to compete with, who's trying to get into this electric vehicle space. The attitude that investors have is that Tesla showed it's easy. And that's misguided. Tesla showed it's hard. What Tesla did, what SpaceX does, is they innovate with extreme urgency. You go to the Tesla Gigafactory at 8 o'clock on Sunday night, and they're working. You go to Starbase, and they're working. People at Tesla work really hard. People at Elon Musk companies work really hard. They sacrifice work-life balance for work. You may not like it, but that's what they do. Other companies, you go there on a Sunday evening, nothing's happening. It's not clear that any of these companies is really pushing hard to succeed in the same way that Tesla did and Tesla still does. That's why Tesla is the next Tesla. Check out, I'm wearing the Be Less Wrong t-shirt, but check out the t-shirts at elonbits.com. 10% off on Thursday, December 16th if you use the code SUPER10. And this is the same risk for Arcimoto, Rivian, Lucid, any other EV manufacturer. Are they going to execute? Are they going to be able to manufacture at scale? All the same problems affect everyone. So I think the same issues there, but it's just how can you justify valuing Lucid Motors or Rivian at more than 200 times the value of Arcimoto? Arcimoto is delivering vehicles. They're producing vehicles. They have a vehicle that people have driven. I drove it. Now, my initial experience driving an Arcimoto was a little rough. There's a learning curve. But I drove it again in Oregon when I visited. They let me borrow one for the day. And all of a sudden it started to click. You know, the learning curve is there, and hopefully as they improve the vehicle, they'll shrink the learning curve. But it's really only about a day and you get used to driving it. And all of a sudden it becomes really convenient to get around. And honestly, Tesla has a learning curve. When I first got a Tesla, there was a learning curve driving a Tesla. I think a lot of people experience the learning curve driving a new car of any manufacturer, but particularly with EVs, there's a learning curve. Arcimoto has its own special learning curve. The steering's a little off at first, the buttons that you got to deal with at first, but you figure it out. It doesn't take that long. And all of a sudden you realize how convenient this thing is, how much money it can save you. And if it can replace your car, it saves you a lot of money. If you're a person who says, you know what, I can drive this 30 days a month, and one day a month I need to get an Uber or I need to rent a car. The amount of money it saves you is pretty dramatic. And for people who are low income, who don't have a lot of money, it's a pretty good move. For people who have money and want this as an extra vehicle, why not? It doesn't cost that much. A lot of advantages to this. You can imagine if you have a two-car family, maybe one person uses the Arcimoto and the other person uses the regular car. When you're doing something together, you're going on a long trip, you take the car. The family can save a lot of money by having an Arcimoto instead of a second car. I see a lot of potential for this working in a lot of different contexts. I do want to stress again the execution risk. Is the company going to execute? When I was there, did I feel like they were acting with extreme urgency? No, not really. I mean, I think that's something I worry about with all these companies. Good people, great conversations. I didn't feel like I was seeing the intensity that really should be there. But I think at the same time, I think they're dealing with some transition because they just acquired this new property and they have to adapt it. I did go in one facility where there's definitely a lot of work getting done. But are they getting to the point where they're going to be able to produce 50,000 a year? Getting to that 50,000 a year production, that's not happening this year, obviously 2021. I don't think they're going to be scaling in any significant way in early 2022. They have to fit out this space that they've got this new factory space in. They have to fit this space out and start, gearing up production. So my guess is that maybe they start scaling production sometime in 2022, maybe mid-2022. Maybe they get to producing a few thousand vehicles a year, and then 2023 would be their year. So if you buy Arcimoto, and just be clear, I bought Arcimoto stock before I visited. I was impressed with what I saw in the Q3 investor call, and I was particularly impressed by the low share price to buy into the stock right now, compared to what its potential value is down the road. It's not the next Tesla. I'm a big believer that Tesla is the next Tesla. I own way more Tesla stock than I own Arcimoto stock. I bought a fairly small amount, around less than $3,000 worth of Arcimoto stock, right? I just bought a small amount because I like it. I want to see what happens. But it's pretty clear there's potential for a 10x or a 50x in this company if they're able to scale production, sell the vehicles. The opportunity is there for a big gain. I still think Tesla's a better opportunity for a bigger gain, but nice people, good ideas, interesting approach. I think there's potential here. I would rather see them focus on their FUV platform and not get distracted by a three-wheeled e-bike. I would rather see them focus on figuring out what your target market is, getting manufacturing down. I don't like the distraction of, okay, we just bought this other company, we got this other vehicle we're working on. My own take on that, I didn't love that. I was impressed with the commitment that Mark Frohnmeyer, the CEO, has to the company. He's been working on this a long time. He's got people working with him. They're all believers. I didn't see any sign of people not believing. I noticed that people were asking about the vehicle. When I was driving it around, people asked me about it. It is something that captures the imagination a bit. Again, I have my own idea for a pod car. My idea is very different from what they're doing. I don't think my idea competes, though. Their target market is like the United States, and my target market is like India, the Caribbean, Egypt. I'm trying to reach, my vehicle target price is like $1,000 or $2,000, where they're hoping to get to $12,000. So very different angles of what we're trying to do. Theirs is fun to drive. Mine is intended to be boring to ride in. Totally different there as well. I think their vehicle's a lot more complex. We have an engineering design for the pod car now. Probably going to rework that. But my design is much simpler, a lot fewer parts. Probably less capable. Obviously, mine's only going to have one passenger. Theirs has two. Theirs has room for more cargo. But basically a different concept. All in all, I just want to say I think Arcimoto has a lot of potential. I bought Arcimoto around $10 a share, so I'm down a little bit. I don't really care. I'm a long-term investor. I'm not looking at selling it tomorrow. I think that Arcimoto it could fail. I mean, this is an important thing to understand. Any of these companies could fail. I don't think Tesla can fail anymore, but Arcimoto, Rivian, Lucid, all of them have potential to fail. Rivian's got a really big cash pile, so they're protected. I don't think Arcimoto has the same kind of cash pile, but so far it seems like they have access to capital if they need it. But just their potential, where they could go. Think about this: a $330 million market cap when Lucid Motors is valued at like $70 billion and Rivian is valued at like $100 billion. It doesn't make sense that this company is valued so low when other companies are valued so much higher. I don't think people see this. I think this is a hidden gem, and I can't give you financial advice. I don't know your situation. I can just tell you, I saw this when I saw the market cap. I said, wait a minute. This company's way too cheap for its potential. There's a lot of potential for this company to grow insanely. Of course, that disclosure, I bought stock in Arcimoto, so if the stock goes up, at least in theory, I benefit, but I really only benefit if they succeed because I'm holding the stock until we see. I hope this is interesting. I hope this is helpful. I want to thank the folks at Arcimoto for giving me a chance to see what they're doing. I want to encourage you to do your own due diligence, take a look at this yourself. I think that low market cap is the winning point there, that it doesn't make sense that Arcimoto is valued so low. It's surprising to me that it's not valued higher. Do your own due diligence. Obviously, any investment's a big risk, especially a company that's just starting out like this, huge risk. But all I can tell you is my experience: good people, good environment, good business model potential. Biggest problem I see is execution risk. Can they execute? Can they get to manufacturing at scale? Can they get this rental model to scale up, and how big is that market? But just that Roadster alone, if you take a look at the Arcimoto Roadster and you compare it to a Harley Trike, that's a no-brainer. It's a better vehicle for less money. So thanks again to Mark Frohnmeyer. Thanks to Jesse. Thanks to the people at Arcimoto for showing me around. I did pay my own way there. Mark did give me a place to sleep for the night, so I got some benefit out of it. I think they bought one meal, I bought another meal. So, this wasn't something I was paid to do. But of course, I do own a little bit of stock in Arcimoto. I don't think I own enough to bias me. Right? I own ridiculous amounts of Tesla stock compared to how much I own in Arcimoto, and I still think I'm objective about Tesla. Of course, thanks to the Vasa Law Firm in Sweden, all my Patreon supporters. Please support the channel on Patreon, link in the description below. And support me on the Locals platform. I have a new channel on Locals. It's warrenredlick.locals.com, where I talk about political content. I'm shifting more content over there to protect myself from YouTube censorship. Check out the t-shirts at elonbits.com, and thank you so much for watching.